You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
Wednesday, 12 August, we got US inflation due this afternoon, 2:30 our time, expected 3.4%. I'm Simon Brown, coming at you live and loud from the Moneyweb Global Headquarters in Johannesburg, South Africa. On the show today, Chantal Marx, FNB Wealth and Investment. I want to touch on two, maybe unloved, ignored, unfollowed stocks. Merafe results, Brait raising money, but where's Virgin Active? Chat with Jeremy Sampson from Brand Finance Africa. So they do a survey on brands for miners and the top 50 report. How are we doing? And then we're going to chat with Absa Business Banking. Resilience rather than cost-cutting is manufacturing's new competitive edge. This podcast is brought to you by Stanlib Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines, Moneyweb, Southern Palladium gets a mining license after 2 decades of trying. And Business Day, MTN shares slide as group issues profit warning. Group signals will report a decline in interim earnings of up to 30% lower. Morning markets, US was red, S&P, Nasdaq both down 0.3%. The East is red, Sydney 0.2% down, Tokyo, fraction 0.01%, Hong Kong just over 1% lower, Tencent almost 3% down. Commodities mostly red, gold futures 4,451, Brent is the green 89.73, platinum 1,768, palladium 1,374. The Rand is 16.18, the Bitcoin is 63,700, and the top 40 opening call red 420 points or 0.4% lower.
Moneyweb Now, on the money. Also available on podcast.
Chatting now with Chantal Marx, FNB Wealth and Investment. Chantal, appreciate the early morning time. As I said in the intro, two little stocks that I don't know. They're not. I don't follow them closely. I don't know how close you follow them. Merafe, one that has been around. It feels like absolutely forever. Results yesterday. They weren't bad. Not bad numbers at all. And of course, they've got that Nersa decision recently. Also helps Afrimat potentially. Merafe, is there something here? Or is this of sort of really more just a passing interest?
Yeah, Merafe is a very cyclical stock because the ferrochrome price is extremely cyclical. And they're very sensitive to input costs. And that's why we're looking for cheaper electricity prices. Because essentially, when the ferrochrome price is under pressure, Merafe is bleeding cash, but to an extent that it was thinking about wrapping everything up. Now, I think the cost structure makes a little bit more sense. But really what they need is global growth to reignite. They need demand for ferrochrome to improve and pricing to improve. And then the stock will be printing cash again. So I think it's a little trading stock. It's not really one that you put in your portfolio and keep forever because you're going to continue to see very big cyclical shifts in that name.
Yeah, actually, I hadn't zoomed out on the chart, and I just did. And let's remove the 2008-ish R4.50. It just moves between 50 cents and R2. I get your point. It's a trading stock. Okay, we'll keep an eye on it. There's something there perhaps for the traders. Brait is another one. Brait has been through a lot of iterations in terms of what it is. It is kind of now wrapping itself up. Raised 2.5 billion. Two questions, I suppose. What's the money for, and are they still listing Virgin Active?
Yeah, the money is to pay down debt. So this business it's been so interesting, as you mentioned, lots of iterations. Used to be the main shareholder of Pepkor, sold that to Steinhoff in exchange for Steinhoff shares, sold those Steinhoff shares just in the nick of time. And now they are looking to wrap this thing up. New Look, which is a clothing retailer in the UK, has been a headache for them, but it seems that is kind of stable. Premier, the bread and food guys here in South Africa, very successful listing. They still own a chunk of that, so they can realize that value, I think, quite easily. But Virgin Active is an interesting one because Virgin Active, you can imagine what 2019 did to that business. Or 2020 at least. And it is looking better. Profitability is looking better, but there's a constant need to refurbish those clubs. And there's a constant need to make it make sense to people. And I think that they need to also make it make sense to the market as a standalone entity that has a standalone listing. So it needs to be in almost perfect condition for it to list. So at the moment, the business is saying 2027 or 2028. But it was 2025 at one point and 2026 at another point. And another interesting fact, Virgin Active almost listed in 2015. I remember doing a note on it, but that's when Brait purchased the business.
I'd forgotten about that. And of course, it comes from Health and Racket, which itself was once upon a time listed. If we and then went bankrupt, and then Richard Branson swooped in. I mean, a quick last question. I take your point around the refurbishing of clubs, but the other side of the coin is nice annuity income. Or is that income perhaps not as annuity as we kind of think?
No, it is quite annuity. People don't want to admit that they're not going to go to the gym. I mean, we've all been in a gym contract before. So I want to dig into those financials and see what it looks like when they finally bring it to market. But yeah, I mean, I think it's going to be an interesting diversified. It's very different to anything else that's listed on the JSE.
And I take your point. No one wants to admit they're not going back to gym. We'll leave it there. Chantal Marx, FNB Wealth and Investments, where she's our head of research. Appreciate the early morning time. Let your money benefit from experience with Stanlib Asset Management. Find out about Stanlib Global Select Fund, which follows an investment discipline that has delivered results for 3 decades. Building wealth doesn't happen by chance. It happens by making the right decisions. Join John Miniaki from Old Mutual at the Moneyweb Economy and Investing Conference at the Money Summit as he shares practical strategies for building long-term wealth, avoiding common investment mistakes, and creating lasting financial success in the real world. Tuesday, 1 September at the Sandton Convention Centre. Register for free using the promo code MONEYWEB. Secure your seat today. Go to moneyweb.co.za and start building a stronger financial future.
Moneyweb now. On the money.
Chatting with Jeremy Sampson, chairperson of Brand Finance Africa, the Brand Finance Mining, Metals and Minerals 50-2026 report out. Jeremy, appreciate the time. I got to say, I love branding. I'm fascinated that you do minings, you do metals, you do minerals. But what thing really stood out to me, Global Top 50, no South African miners in there. I mean, we are a country built on mining. It's what we are. It's who we are. Yet we have, I suppose, to say, fallen far.
Simon, good to be with you. Yes, you're absolutely right. You know, I was at a Brand South Africa annual report back on research findings only 10 days ago. And they say South Africa is known for its mining industry, for its mineral resources, et cetera, et cetera. Well, that's all historic stuff. As you're rightly saying, we're nowhere. And actually, if you go back perhaps, 30 years, we had some very considerable mining houses, and they really were very powerful and very important for the economy. Where have they gone? Well, for the most part, they've either been split up or they've gone overseas, and perhaps in some cases they've been taken over. You know, the great Anglo-American, people forget, it moved to London in 1998. So from then on, Anglo and its subsidiary De Beers were now British companies. And of course, later this year, they're doing a deal with the Canadians. So there'll be Anglo Tech. Who's heard of tech, by the way? And that's going to be listed on, I think it's the Vancouver Stock Exchange. So they're even moving further away. No, there's a lot going on, as you say.
Yeah, agreed 100%. I mean, they're going to be in some cold part of Canada, although to be clear, it's a cold part of Joburg today. But you mentioned De Beers. I mean, De Beers they weren't the most famous name in diamonds. They were diamonds. I mean, it was just, and I was too young I wasn't even born when they were doing those ad campaigns of the 40s and 50s and the like. But they really were the industry, and that brand has just vanished. It's just gone.
Well, again, you're raising a fantastic point. In South Africa, was it 2 weeks ago, Dave McKay produced the annual mining yearbook. And I'm not a mining person, as you know, I'm a brander, but reading through that is fascinating. People forget that in 2011, the Oppenheimer family decided to get out totally. They sold their final 40%. For that final 40%, they got paid cash.
Yeah.
That's what it says, cash, for about 5.1 billion. And that put a value on De Beers as a company of nearly 13 billion US dollars. But when they did the deal, they actually put in the small print that there was no such thing as a De Beers brand. It was zero. Now, I ask you, as you alluded to, that slogan, 1947, a diamond forever, diamonds and De Beers are like chocolate and Cadbury's, they go together. So what on earth have Anglo done over the years? Now, today, as we know, they're trying to flog it off for $1 billion and they still can't find a buyer.
No, they still can't find a buyer. In the report, you talk around unhelpful government. You also talk around management that doesn't understand brand building. The unhelpful government part, we get that. We totally do get that. But also, I can't help thinking that the boardrooms, Neil Froneman, and to be clear, I don't know, and maybe I'm throwing him under the bus, but I can't imagine many of these mining boards are sitting there and thinking about brand. They're thinking about holes in the ground and metal prices, but they should be thinking about brand.
You're absolutely right. No, they have their investment guys, but do they have marketers? They have sales guys, yeah. But, when you look at the top company, by brand value, which is Glencore. And of course, Glencore is Swiss, but has got huge interests in South Africa. And of course, they've had a chief executive until recently who was South African. So there are strong links there. But no, wearing my Interbrand hat going back 15 years ago, I was involved then with RTZ, Rio Tinto to some. And in 15 years ago, they were talking about growing the brand, the importance of sustainability, et cetera, et cetera, et cetera. Never have I actually had a similar discussion in South Africa, other than briefly with Mark Cutifani in his Anglo Gold Ashanti days.
But also, Mark Cutifani was a brand in of himself. He was a snappy he was a snappy dresser of an individual. I'm thinking of our biggest miner, Valterra Platinum. It used to be Anglo-American Platinum, of course. $364 million as brand. It sounds like a lot. Glencore, $5.5 billion. This isn't about the size of the business. This is the storytelling part, and it comes back to Mark Cutifani, who could tell a story about anything.
Absolutely. And that's where, people talk about the marketing of the myth of diamonds, coming back to De Beers. Yeah. Again, reading this report, apparently they spent about $100 million US in 2014 on marketing diamonds. They spent much the same last year, and in between, nothing. And then they wonder why the bottom's fallen out of the diamond market. I know Lab Diamonds has come along, and that's improved dramatically over the last decade or so. But the fact of the matter is you can't turn marketing and brand building on and off like a tap. If I say to you that we're coming out with our luxury brand rankings next month, and I looked up the value of a certain brand called Cartier, diamonds, jewelry, all sorts of things, owned by a certain Johann Rupert at Richmond. Do you know the value of that brand on its own, Cartier? $12 billion US dollars.
Wow.
And there you have brand building as opposed to commodities, and commodities equal diamonds, copper, coal, and all that stuff.
Yeah, I do think. It struck me as a weird idea, but I think you've convinced me. I think we're missing a trick here. And I take your point. We don't only sort of do the brand building in the good times. You've got to be consistent with it. And I think that's where maybe a lot falls flat. Jeremy Sampson, Chairman, Brand Finance Africa. Appreciate the insights. That's our poll today on LinkedIn. I have to be honest, I'd never given thought before to the idea of brands and brand building and the like. But here we are, and what we do need, I suppose, if you're a mining company, a brand still matters, and perhaps as much as anything else. So have your vote. Are miners missing a trick in terms of branding? LinkedIn, have your vote, have your say. The Stand-Up Flexible Income Fund is designed for pre- and post-retirement income and capital preservation needs. Retire without regret with Stand-Up Asset Management.
Moneyweb now on the money.
Chatting now with Sachin Chanderdhev. He's head of manufacturing sector at Absa Business Banking. Sachin, appreciate the time. Manufacturing has long been a tough space, but in a recent note, you make a really good point. You talk around the idea of just old-fashioned sort of focusing on costs and trying to cut those costs. No longer enough for the sector. The manufacturing sector needs, and in many cases has been getting smarter around survival and focusing on resilience rather than just costs.
Hi, good morning, Simon. Absolutely right. Yeah, perfect. So yes, Well introduced. I think it's important that manufacturers are no longer looking at that incremental kind of cost changes. It's more around a strategic overview around risk management, around a longer term view to the operations to build resilience, Simon.
And some of it, I mean, for example, power, it started with load shedding, and we, needed to solve the load shedding problem, which meant a lot of generators, in some case, some rooftop solar. But that's almost become we've now had, I think we haven't had load shedding in over a year, but it still remains critical to the sector. But it's now about sustainability. It's about being green. It's kind of like what started as a problem has kind of morphed into a proper solution and a business decision.
Absolutely. So if you think about that, the load shedding situation, when we, for manufacturers generally, the key kind of goal is to make sure that you have continuity of operation, long runs, reduce unit costs. And again, so it was a matter of how do we keep the operations on at whatever cost. So that's where we brought in the diesel generators. But now with the costs going up quite significantly with the tariffs that's come in, it's definitely a case of how do I rethink my energy mix? And there's two things. So one, you remove the cost out of unnecessary costs out of your operation, and two, you're already starting a green journey as well.
Absolutely, and you get the two wins. And I imagine as management in the manufacturing sector, and they'll obviously be chatting with people such as yourself, the idea is to sit down, look at, and to be clear, costs are always important, but to look at where you're getting bottlenecks. And I'm thinking ports is probably a one. Where you're having problems, power was one. Where you anticipate problems, water's probably another. In other words, find these bottlenecks and then squeeze out the solutions, which in some cases are cost cutting, in other cases might be, backup water or, solar panels. Yes.
Simon, very correct. I think what's important there is that you're building resilience and you're also taking out unnecessary costs, right? So once you build out solutions like you mentioned, so if it's for example on your supply chain, and you're looking at your input costs on raw materials and different suppliers, changes in that supply chain will impact you quite significantly, either with time and in money, right? So it's a matter of finding the new alternatives, mapping them out from start to from the start of your process right till the end of your manufacturing process. And there's significant opportunities at each of these stages. It's a matter of how do you which ones do you want to focus on and which ones do you want to prioritize, because in the long run it reduces your unit costs and improves your competitiveness.
And I imagine lots of bringing in skills. Manufacturing companies are not going to be experts in water or solar power or supply chains, or maybe supply chains, but and that's where sort of the likes of yourself and colleagues and others will come in to bring those skill sets which the manufacturing executives perhaps lack. That they can make a widget, but they might not know how to do a water filtration system.
Yeah, and I think as Absa Business Banking, we've partnered with quite a few the installers across the water sector, as well as the renewable energy sector. So we've been in this game for quite a while, and have built up a little bit of intel around the type of solutions that manufacturers typically require.
Yeah.
And then also thinking about how you model it, right? I think it's and fund these operations. It's very critical that we also manage our working capital, Simon. So having the right partner on board to understand this process end to end is quite critical for businesses or manufacturing businesses to have them up early in the process of strategic planning.
Yeah, and I hadn't actually thought about that cash flow. Of course, that's a huge issue as well. But you leave it there. Sachin Chanderdhev, he's head of manufacturing sector, Absa Business Banking. Appreciate the early morning. That's it for today. We're chatting with Dylan Bradfield yesterday. He, of course, from ShareNet. We're talking the Spur trading update. It had some one-off provisions. They've lost an arbitration. But aside from that, it didn't look too bad. It turns out we were out there eating. Now, as Dylan says, maybe it's because you've all got children and the Spur owns the kid meals. But we asked you, are you still eating out even as wallets are being squeezed? About 3/4 said yes selectively. The rest split between nope, not for you, and all the time. Have your vote. Have your say. LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning on the Moneyweb website and the app, 6:30 a.m. podcast just after 7. Thanks to my team, Eddie Nobuchle, Nicole Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. We'll chat again tomorrow. Weaver FinTech results.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.